Hello everyone and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, the 74 plate change is well underway now. I should imagine a lot of listeners were incredibly busy from certainly last weekend onwards. And let's hope they're having a good first week and a strong month.
Yeah, I don't know about you. I haven't really been out this week, to be fair, so far to see if I can see a 74 plate anywhere. But I don't know if you have.
Yeah, I've been out and about and I've been looking, but I haven't seen one yet, not even on a trailer. So I'll let you know when I see my first one.
Hopefully the majority of them aren't still going through PDI to park on a used car forecourt as a tactical registration, but maybe I'm being facetious there, Curtis.
Yes, yeah.
But no, I think we'll get on to the new car performance, won't we, shortly, because as you say there, the new car figures for both the car and the LCV and some of the European markets are out this week, so it'll be interesting to see how the UK have fared up against some of our European partners in terms of that the August registration plate. But it's going to be interesting. I think key now is on September now, isn't it? See how the month of September performs.
Yeah, definitely. That is the focus. As you say, we will look at trends over the course of August, but everyone is now very much focused on September.
Yeah, I don't know about you. I'm still getting quite a bit of good feedback on the Darren and Dylan interview. It still seems to be doing very well. It's still getting a good listenership and sort of activity on that one.
Yeah, no, definitely. And if you haven't heard it yet, do catch up with that particular standalone podcast, because it's the first time that we've looked at current values and forecasted values over the coming months and indeed the coming years. And it was great having them both on to explain and analyse what they're seeing, what trends they're seeing. So that's definitely one to listen to.
But no snippets this week. We have got a jam-packed podcast this week with lots of headlines, which we'll get onto shortly.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Well, you're right, Phil. We have got a jam-packed show this week. So headlines this week come from Car Dealer, AM, Motor Trade News, Motor Trader, which I think is pretty much a full house now, and The Telegraph. So we'll start with a look at August new car registrations from the SMMT, and we'll also have a look at used car retail trends from Motors. As we've said, it's plate change month, and JudgeService has just published the results of its latest research on where buyers prefer to go for their part exchanges. The UK is set to become the key battleground for Chinese EV brands as EU tariffs start to bite, according to the latest Insight Quarterly from Cox Automotive. We'll look at that much talked about front page splash from the Telegraph earlier in the week about OEMs rationing petrol cars to meet EV targets. And we'll close off this week's show with a roundup of the latest financials from some of the big name dealer groups.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Well, as Curtis said there, the new car figures are out this week, so we'll cover the story that's in Car Dealer magazine. So this is the August new car market dips by 1.3% ahead of a critical plate change month, saying that the new car market is relatively stable in traditionally what is termed as a fairly quiet month in terms of volume, that sales declined by 1.3% to 84,575, and the battery electric vehicle car demand was up by 10.8% thanks to summer of heavy discounting. So kind of linking what we've been talking about recently around that EV sector, but reasonably good performance from a high level number perspective for the month of August.
Yeah, definitely. And I was interested by that reference to the summer of heavy discounting. And I wonder where that heavy discounting is actually going to and coming from. And I may have the answer for that because the story does actually say, continuing the recent trend, fleet purchases very much drove the market, accounting for 6 in 10 cars registered over the course of the month. So that accounted for just over 51,000 units. But that's despite a 1.2% drop versus August last year. So I suspect, I mean, it's pretty much on a par with last year, but I suspect some of that heavy discounting was in the fleet sector because that is looking very, very healthy for the month and certainly in the year to date. Now, looking at registrations by private buyers, they were pretty much flat, up by 0.2% to 32,000 units, so a long way short of those fleet registrations, while business registrations to fleets of under 25 vehicles were down by 30% to just over 1,000 units.
Yeah, and I think this is key now, isn't it? I think the pressure is starting to build, and we'll get onto a little bit more of that shortly, won't we, with the Daily Telegraph press release this week in terms of activity there. But EV is certainly under a lot of pressure at the minute, and the private isn't shifting to support it, is it?
No, not at all. So looking at fuel, so petrol and diesel uptake fell by 10% and 7% respectively. However, together they still form more than half of the new car market. So that was 57% of new cars registered in August were ICE vehicles. Looking at plug-in hybrids, they were down 12.3% for the month. But hybrid electric vehicle uptake rose by 36%. So, I mean, there's some fascinating dynamics hitting the market at the moment with plug-in hybrids and pure hybrids. And looking at battery electric vehicles, they rose by 10.8% for the month to 19,000 units. And that really is down to the heavy discounting that we were alluding to at the beginning of this story.
Yes, exactly. So I think August is, as you said right at the start there, a traditionally fairly low volume month in terms of that 84,000. It has performed reasonably well, all things considered. I mean, it's 9.7% above the 2000 to the 2019 average. But still a little bit down behind the pre-pandemic 2019 year that was down 8.6% against that. But all things considered, it doesn't take many units to shift that percentage in such a low volume month. I think, as we said right at the start there, I think key is now going to be on September and what September does mean for the market. And just before we talk to you about vans, in terms of that European market, just to give a little bit of context of what's happening elsewhere, France, similar in terms of volume at 86,000, but they were down 24.3% year on year. Germany, a bigger month for Germany in the month of August at 197,300 units, but that was down again, big number at 27.8% year on year. Italy, marginally down at 13.8%, down to 69,100. And a very low volume month for Spain is August, down to 52,300, and that was a decline of 6.5% over there in Spain. And then we've got the LCV data, haven't we, Curtis?
We have indeed, yeah. That's a big fall for Germany, isn't it?
Yes.
27.8%, and lots happening in
Lots happening
Germany.
in Germany at the minute,
Yeah,
isn't it? But not here.
and
Yeah.
we've got so many headlines this week that we haven't been we won't be able to touch on some of the stories coming out of Volkswagen, but maybe that's something we can revisit next week. So LCVs, the van market ends summer with a return to growth, which is welcome news. So LCV registrations were up 1.7% in August to just over 16,500 units. And it's the best performance for the month since 2021. And that does follow 2 or 3 months where the market has come down. Demand continues across all van segments, which is encouraging. EV uptake has declined for the fifth month this year, dropping 30%. And it really highlights that need to bolster confidence and maintain some form of fiscal support for new van registrations, because that's nowhere near where it needs to be to hit everyone's targets.
No, you're right, and I think we do talk a lot about the ZEV mandate and its impact on the car market for obvious reasons in terms of volume. But the LCV has a bigger hill to climb, doesn't it? At the minute, I mean, they're
Yeah.
actually declining in terms of those BEV registrations. It's not a case of stability or a marginal increase; they're actually declining. So, there is a lot more work to do in that commercial vehicle market for this transition to EV. But we'll head over to Motor Trade News now, where they've covered the story, which is the from the latest data from the Motors platform, who are the power of the podcast, and this is that no holiday break for used car market in strong August. Dealers see plenty of activity in traditionally quiet sales month. So this is again from their market view, isn't it, Curtis, in terms of some of that data they look at in terms of that month of August.
Yeah, it is, and I did help the guys with the press release on this one, so I did see the data, and it was fascinating. So August, as you say, traditionally a quieter month, because of that, the distraction of the summer holidays, certainly, the school holidays. But what Motors saw was that there was plenty of activity across the platform. So dealers actually saw improved days to sell, as prices and stock levels remained pretty steady. So looking at days to sell first, over the course of the month, they averaged 28 days, which was actually 4 days faster than July. Franchise dealers very much led the pace at just 18 days, averaging 18 days, followed by car supermarkets at 22 days. And also good month for independent dealers, because they averaged, albeit a longer 50 days, but that was a month-on-month improvement of 7 days. And in terms of activity, what buyers were doing, that Motors actually tracked that views per vehicle for the month actually increased by 7% to reach a new high for the year, with vehicles priced under £10,000 attracting the most attention. So very much the sweet spot at the moment for used car buyers.
Yeah, they're looking at the, in terms of the pricing within the market, the average advertised price of a used car remained fairly stable at 17,362. It was a marginal dip of £58 after a peak that they saw back in January 2023, that it peaked at 19,183. So fairly stable in terms of that average pricing across the market there. But again, they go into a lot more detail within the market view there at Motors. So I think, as always, there's a lot of information sat within that report there. But Lucy Tugby, who's the marketing director of Motors, did comment that the used car buyers had remained active despite the traditional impact of the summer holiday season, and that affordability remains the key issue for many used car buyers, as seen by the high level of interest in vehicles priced under £10,000, and that's rewarding dealers prepared to source older cars as part of their stock mix. So kind of highlighting there how stock mix is clearly the driver of some of those early performances around days to sell.
Yeah, definitely. And staying with that theme of used cars, the next headline comes from AM Online, and it is franchise dealers remain preferred choice for part exchange valuations despite rise in online services. So this is the latest research from JudgeService, and this is something that I've been involved in. I did the release on this for JudgeService, so I actually got to see the findings from it's actually the forthcoming State of the Nation report that will be out later this month, and I know Neil Adley at JudgeService is busy at the moment pulling that together, but it's the big annual research they do. That this year they polled the views of just under 5,800 customers to find, to see what trends were impacting the market. And this particular part looks at part exchanges, and they found that nearly 2/3 are likely to obtain a part exchange valuation from the retailer they plan to purchase from. And that's actually up from 62% last year. So these are franchise dealers that we're talking about. And despite the growing presence of many of these specialist online valuation services, and this was a bit of a surprise to me, only 14% of respondents said they were likely to use one, and that was actually down year on year. So the preference is very much for dealers, and that's evident across most age groups, because that's from 58% among those aged under 25, rising to 66% for those aged over 75. And interestingly, the demographic that is more likely to use an online service is that age group between 46 and 55. They're the most inclined towards online services, but that only accounts for 17% of buyers.
Yeah, no, I think it's good insight, and I think there's probably a bit of credit to be given to some of the dealers that are actively trying to do the best in terms of encouraging those price exchanges. And as you say there, Neil Adley does comment saying that that their data once again highlights the often overlooked role of franchise dealers as the preferred source for part exchange valuations, despite the buzz created by online car buying services, and that with the September plate change marking a crucial period for part exchanges, dealers must strive to make the process as straightforward as possible for both existing and new customers to secure their fair valuations for their trade-ins, especially in the current subdued new car retail market. So Neil there really highlighting the importance to the dealers around getting that valuation right for the September plate.
And these findings are very topical because, as we were talking to Darren and Dylan just a week or so ago, and how those part exchanges start to ramp up towards the back end of September and into October. So there's cause for optimism there amongst franchise dealers. So more headlines after the break.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So next headline comes from AM Online, and it is UK set to become key battleground for Chinese EV brands as EU tariffs bite. I was looking forward to this story, Phil, because there's so many balls in the air with this particular story. Because what it's based around is the UK market, as certainly one of the largest in Europe, is set to become a critical battleground for Chinese automotive brands following the EU's new tariffs on battery electric vehicles, which is a story we covered a couple of weeks ago, because the tariffs came in July. They've already been changed.
Yes.
They're starting to bite. We saw an awful lot of activity amongst the Chinese brands in the months leading up to July as they got registrations out there and cars on the road. But this is some research that you guys have done at Cox Automotive with Grant Thornton for the latest Insight Quarterly, isn't it?
It is, yeah, and obviously this is an area, as you say, very topical at the minute, as the tariffs are finalised for Europe, and they did, like you say, they were announced and then swiftly changed shortly after, and what they are looking at imposing on those Chinese manufacturer products entering the market in Europe. We know what's been going on over in the US. In terms of those tariff blocks over in the US there. And it was recently announced about Canada as well, imposing some significant tariffs to the Chinese manufacturers. But what Owen was trying to call out, and Owen is, if you're not aware of Owen, is head of downstream automotive at Grant Thornton. He supplied this for the, as you say there, Curtis, for the Insight Quarterly that I produce with Cox Automotive, obviously every quarter there. But sort of saying around, this is how it's going to start to buy. And we know that the UK currently have been looking at what they do around tariffs. How do they navigate that relationship with Europe? And, how do they then also navigate that relationship with China in terms of a trade agreement with China there? So, yeah, we still don't know yet what the UK intentions are, whether they're looking at doing something similar to Europe, whether they're going to do anything at all, or will they do something that's slightly a little bit softer than Europe. But clearly, I think this is where, Owen is looking at how the Chinese manufacturers are going to navigate their way through, where the market of focus is going to be. Does that make, the UK the key market for a target for the Chinese manufacturers to navigate around those tariffs that are being imposed in other markets?
And it is a curious one because we haven't heard anything. Well, I certainly haven't heard anything about the proposals around tariffs for the UK. So we don't know. So if I was a Chinese manufacturer, I would be looking at the UK market very, very closely and putting a lot of cars on boats to get them into the UK as soon as possible, especially for September.
Yeah. I mean, as you say, going back to those new car registrations, it will be very, very interesting. I mean, you only need to look at the year-to-date registrations by manufacturer, those that are declining, some of the more well-known, those legacy OEMs that have seen some significant falls in year-on-year registrations, which we'll talk about probably in the next story a little bit more detail. But yeah, clearly where those Chinese OEMs are coming. And just whilst we're on AM, just a shout out that just a reminder that AM Live is on the 13th of November, which is the Wednesday, down at the NEC there as usual. So for anybody that hasn't registered, then I would suggest registering. It's always a great event down there at the NEC. But moving on, and this story, I think there was a double story on this one because it came out at the start of the day and then very swiftly followed up with another story later on that day. And this was in the Telegraph there, that petrol cars rationed to meet eco targets. Warning comes as consumer demand for expensive electric cars continues to wane. Now, the story really is on the back of the financial results from Vertu, from Robert Forrester, who highlighted the risk and the challenges faced in terms of the financial performance of Vertu and the adjustment to their forecast outlook, but really went into a little bit more detail around the problem that's starting to bite in the UK as the manufacturers, legacy manufacturers, trying to navigate the ZEV mandate.
Yeah, and the story appeared, as you say, at the beginning of the week, and it was the lead story on the front page of the Telegraph. So for a lot of consumers out there, this will be the first time that they were made aware of the dynamics that are impacting the industry at the moment as manufacturers start to dial down their ICE sales and dial up their EV sales to meet the ZEV mandates targets and avoid some of these punitive fines. And what we have is Robert Forrester, obviously friend of the pod, really sounding off about the state of play. And I think what he's saying is pretty much felt by every dealer group and indeed every dealer. So within it, he says in some franchises, there's a restriction on supply of petrol vehicles and hybrid cars, which is actually where the demand is. It's almost as if we can't supply the cars that people want, but we've got plenty of the cars that maybe they don't want. And that really does highlight this dynamic, doesn't it? That if you're in the market for a new car, you want petrol or diesel or a hybrid, you can't necessarily get them because the supply is being constrained by the OEMs because they want to be selling more EVs, and this is distorting the market.
Yeah, and Robert's very, very clear on this. I mean, obviously, there's the risk and the challenge to the OEMs, which we've talked about a lot on this podcast, around that ZEV mandate, the fines that will be potentially imposed, or the cost if they decide to buy credits or borrow the debt. There's still a cost involved with all this, and there's a heavy cost in terms of the incentives and the support that they sent, in the market at the minute, either through the fleet, which we've talked about on a regular basis, subsidising that fleet sector to encourage that registration activity to achieve. And, are they better off losing £10,000 on a car as opposed to paying a £15,000 fine? Those are the big questions with this. But I think Robert is really trying to highlight, this year it's 22%, but the bigger problem comes if nothing is resolved. Moving to 28% next year will accelerate this problem even further, and highlighting that the UK, if they don't get something resolved, we could face a significant decline in new car registrations in 2025 as a result of this. And Robert was very clear in terms of the impact on the finance for the dealers, because they're selling cars at a subvented price with heavy discounts in the new car market to get people into this EV, but that's not financially profitable for the dealers. It might get the registrations for the manufacturer, but it doesn't get the profitability for the dealers, and they haven't got those ICE vehicles to sell to the customers that are prepared to pay the money that want those vehicles, where the profit margin is for the retailer. So significant warnings there coming out from Robert on the state of the market.
Yeah, and there's a lovely sign-off quote from him where he says the new car market is no longer a market, unfortunately. It's a state-imposed supply chain. Discuss. I mean, which sums it up neatly, and it's, this is all down to the ZEV mandate, which obviously the current government inherited, but we do need some clarity around this now.
Yeah, definitely. Maybe we'll get Robert on soon, and we can talk about it in a little bit more detail with him. But moving on to some financial performances, and obviously the first one there we've alluded to from Vertu with Robert Forrester, and that's in car dealer. Vertu Motors reports strong trading despite new car sales down to softening market, saying that Vertu Motors have published their 5-month trading update on the London stock market, and that the group revenues up by 3.3% on a like-for-like basis. Service revenue rose 8.4% on a like-for-like basis, and the used car sales were up but sales for new cars were down, and obviously highlighting there about the discounting and the oversupply being blamed for that, and saying that the full 6-month results will be announced on October the 16th there. So sort of a trading update there from Vertu Motors.
Yeah, and as you say, it's very much based on the first half of the year. And within the story, it says that H1 profits will be lower than in previous years as anticipated, although the second half is expected to improve on prior years. So we'll look out for the 6-month interim and report on that on the podcast.
So remaining with that first half year trading period, the other story on that period is from motortrader.com, and that's that weak demand in Europe and EV price markdowns hit Heden in H1. So again, they're saying that the EV market and the cuts around EV vehicles, as and this is from Heden Mobility, hit the performance in the first half of trading, saying that the group turned in losses of MSEK 718, which is a minus 53.3 million on turnover. So yeah, really highlighting that the market has been challenging for the Heden Group in the UK. And CEO Anders Heden said that the market has continued to be characterised by caution during the second quarter of this year. So not dissimilar to what Robert is highlighting there, that it's definitely, EVs is causing the significant pain across the dealers as we trade through this first half of 2024.
Yeah, definitely. And the final three stories are looking at the full year from 2023, starting with Motor Trader. The headline there is TrustFord profits fall 43% to 15.1 million in 2023. So, and that's on turnover that was actually up by 9.2% to 1.88 billion. And that is for the full year to the end of December. Unfortunately, there's not much more detail within the story, but as a headline figure, it certainly gives an indication of maybe some of the issues facing the industry generally, because TrustFord is a major player, so that's a big loss in profits for the year.
Yeah, and an air of optimism here for trading through 2023 over to AM Online. John Clark hit 1 billion turnover in 2023 and secures as top 20 dealership. So the family-owned John Clark Group has topped the 1 billion turnover milestone in its latest figures for 2023, with net profits placing it in the upper quartile for return on investment. So a big shout out to the John Clark Group, and it's a great group there that's up in the Scotland territories north of the UK.
And the final story for this week is from AM Online, and the headline is Holdcroft revenues top 750 million, but profits hit by external factors. So this is the Holdcroft Motor Group based in Hanley in Stoke-on-Trent, which certainly has grown over recent years. It was founded in 1966 by Terry Holdcroft, so very much a family-owned business, multi-franchise, and it saw turnover in the year surpassing £750 million, in spite of facing substantial challenges that impact overall profitability. And in its financial statement for the year ending December 2023, the company reported a turnover increase from 659.9 million to that 750 million mark, reflecting robust sales across its portfolio of brands. However, despite that growth in revenue, pre-tax profits were down from 10.2 million to 8 million for the year. The company actually attributed this to a decline in a range of outside factors that had a significant impact on its financial performance. So, certainly a good year there for increased turnover, but not so good news there for pre-tax profits.
Yeah, so again, lots of headlines there. So, I think clearly those full year 2023 performances there showing a little bit more optimism in terms of that performance against the early ones that we've seen so far this year, with the trading updates there from Heden and Vertu, sort of citing what's been happening in the first 2 quarters of 2024. So, been a busy week for headlines, but as always, these will be in your news letter on Monday morning, and as always, we highly suggest if you've not seen these headlines, then please do take a look in a lot more detail, and particularly on some of those ones earlier in the podcast this morning around the petrol cars rationed, as Robert has highlighted out to the consumer press there this week.
Yeah, definitely. So a busy show there, but that is all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.